In 2008, Tesla was weeks away from bankruptcy. Investors called it a joke, Wall Street shorted it to the ground, and experts said betting on Tesla was financial suicide. But a few brave believers took the risk, and those crazy high-risk investors became millionaires. In 2001, Amazon's stock collapsed by more than 90% after the dot-com bubble. People laughed at Jeff Bezos, saying the company would never recover. But those who had the vision to hold, those who dared to invest in what looked like a disaster, they witnessed one of the greatest comebacks in financial history. And in 2016, almost no one believed Nvidia was worth more than a few dollars a share. It was too risky, too small, and too unpredictable. But those who saw the rise of AI before the world caught on, those high-risk believers, are now sitting on unimaginable gains. This is the truth about high-risk stocks. They look insane in the moment. They look dangerous, controversial, unpredictable. But sometimes, they are the seeds of the next financial revolution. In this video, I'm going to reveal 5 controversial high-risk stocks to buy now in 2025. Not hype. Not speculation. Real stories, real companies, and real opportunities that could shape the next decade. If you're ready to think different, if you're ready to take the kind of bets that change lives, then stay with me until the end. Because missing these stocks could be the costliest mistake of your financial journey. The first stock on our controversial high-risk list is Palantir Technologies, a company that has lived in the shadows for years. When Palantir went public in 2020, Wall Street didn't know what to make of it. Some called it a dangerous gamble. Others said its government contracts made it untouchable. But almost everyone agreed on one thing: this stock was too risky. Why? Because Palantir wasn't selling consumer products. It wasn't a household name. Its core business was building software for intelligence agencies and governments, software that could sift through oceans of data to find hidden patterns. Critics laughed. They said, "Who would buy a stock that only spies and militaries use?" But here's the reality. In a world drowning in data, the ability to make sense of that data is priceless. Palantir didn't just survive. It began signing deals with Fortune 500 companies, with energy firms, with health organizations. And when the AI revolution exploded in 2023-2024, suddenly everyone realized Palantir wasn't just another tech firm. It was sitting on one of the most powerful data platforms in the world. That's what makes Palantir a controversial high-risk stock. It's not like Tesla with cars you can drive, or Amazon with packages you can touch. It's invisible, complex, and often misunderstood. But ask yourself this: when governments rely on a company to secure intelligence, when industries depend on its software to optimize billions in operations, is that really high risk, or is it the hidden edge of the future? Palantir is volatile. The stock can swing 20% up or down in a month. Critics still call it overvalued. But believers argue that Palantir is becoming the backbone of AI-driven decision-making. This is the essence of controversial investing. The crowd laughs today until the story changes tomorrow. The second controversial high-risk stock on our list is Roku, a company that almost no one believed could survive against giants like Apple, Google, and Amazon. Back in the early 2010s, Roku was a tiny streaming device maker. Wall Street said, "They're too small. How can they compete when Apple has Apple TV, Google has Chromecast, and Amazon has Fire TV?" For years, Roku was treated like a joke. Its stock was volatile, sometimes dropping by more than 70% in a single crash. Analysts wrote it off as too risky, saying it would get crushed the moment the tech titans turned their full attention to streaming hardware. But here's what everyone missed. Roku wasn't just selling a device. It was building an ecosystem. Every Roku TV, every Roku stick connected millions of households. And once people were inside the Roku system, the company wasn't just making money on hardware. It was making money on advertising, subscriptions, and content partnerships. By 2020, Roku had become one of the biggest streaming platforms in America. But then came the challenges. The streaming wars exploded, competition intensified. Ad revenue crashed during downturns. Investors panicked, calling Roku's business unsustainable, and yet Roku kept fighting back. It signed new ad deals. It became the gateway for dozens of streaming services. And in 2024, as more households cut cable, Roku stood as one of the few independent platforms left, still surviving against the giants. That's why Roku is a controversial high-risk stock. The risks are obvious. It's small compared to big tech, heavily dependent on ad cycles, and constantly under pressure. But the reward? If Roku can hold its ground, if it can continue growing its advertising platform and keep its grip on millions of households, then this tiny company could remain one of the most important players in the future of streaming. High risk, high controversy. But maybe, just maybe, the next chapter in entertainment won't be written by Apple or Amazon, but by Roku. The third controversial high-risk stock is Beyond Meat, a company that was once celebrated as the future of food, but today stands on the edge between revolution and collapse. When Beyond Meat went public in 2019, it was one of the hottest IPOs of the decade. The idea was simple but bold. Replace traditional meat with plant-based alternatives that taste just as good, but are better for health, animals, and the planet. Wall Street couldn't get enough. The stock skyrocketed, making early investors huge gains. But then reality hit. Competition flooded in. Costs stayed high. Consumers loved the idea of plant-based meat, but many still preferred the real thing. Beyond Meat's sales struggled, and its stock price collapsed more than 80% from its peak. Today, analysts call it a failed experiment. They say the hype is dead, the brand is fading, and the future looks grim. But here's why Beyond Meat remains a controversial high-risk stock worth watching. The shift toward healthier and sustainable eating is not going away. Governments, schools, and corporations are under pressure to reduce carbon footprints, and plant-based foods remain a solution. Beyond Meat still has brand recognition and global partnerships with giants like McDonald's, Taco Bell, and KFC. So the question is this: is Beyond Meat the next Tesla of food, beaten down by early struggles but ready for a comeback? Or is it just another fad, destined to vanish like so many hyped companies before it? This is the true nature of high-risk investing. The line between disaster and destiny is razor thin. For investors with vision, Beyond Meat is either the riskiest bet on the table or one of the greatest turnaround stories waiting to happen. The fourth controversial high-risk stock is Virgin Galactic, a company that promised to take everyday people into space, but instead took investors on the wildest roller coaster ride of their lives. When Virgin Galactic went public in 2019, the dream was electric. Richard Branson stood before the world and said, "Space is open for business." For a moment, investors believed. The stock soared, fueled by visions of tourists floating in zero gravity and billionaires lining up for tickets to the stars. But dreams crash hard. Delays piled up. Test flights were postponed again and again. Investors watched as years passed with little revenue, while competitors like SpaceX and Blue Origin stole the spotlight. At its peak, Virgin Galactic was worth billions. Today, it trades like a penny stock, dismissed by many as a broken promise. So why is it still on this list? Why is Virgin Galactic a controversial high-risk stock? Because if even a fraction of its vision comes true, the payoff could be extraordinary. The space tourism market is still real. Wealthy customers are still waiting. And the dream of making humanity a spacefaring species is bigger than any short-term stock chart. Yes, Virgin Galactic might burn out completely. It might remain a cautionary tale of hype over execution. But it also might achieve what few companies on Earth can, putting civilians into space and proving that exploration beyond our planet is not just science fiction, but an industry. This is the essence of controversy. For some, SPCE is worthless. For others, it's the ticket to the future. And for risk takers, it's a gamble that could either vanish into the void or shoot for the stars. The fifth controversial high-risk stock on our list is GameStop, a name that has already written itself into financial history, not because of its fundamentals, but because of the power of ordinary investors fighting Wall Street. In 2021, GameStop was a dying retailer. Its stores were half empty, sales were falling, and analysts agreed it was on the path to bankruptcy. Hedge funds placed massive short bets, confident they could profit as the company collapsed. But then came the rebellion. A group of retail investors on Reddit's Wall Street Bets rallied behind the stock, buying shares, posting memes, and refusing to sell. What started as a joke became a movement. The short squeeze exploded, sending GameStop stock soaring thousands of % in days, shocking Wall Street and making headlines around the world. For a brief moment, GameStop was no longer just a failing video game retailer. It was a symbol. A symbol of ordinary people standing up against billion-dollar hedge funds. But after the dust settled, reality returned. GameStop's core business is still struggling. The hype faded. The stock crashed back down, and critics declared the saga over. So why is GameStop still on this list of controversial high-risk stocks? Because its story isn't finished. The company has new leadership, new strategies, and a loyal base of retail investors who still believe in the underdog story. If it can pivot into e-commerce, NFTs, or a new gaming frontier, GameStop might reinvent itself. Or it might collapse, remembered only as the meme stock that shook Wall Street once, and never again. That's the risk. That's the controversy. For some, GME is a worthless gamble. For others, it's the ultimate comeback play. And for high-risk investors, it remains one of the boldest and most unpredictable bets in the market today. Here's the truth about controversial high-risk stocks. They divide opinions. They scare the cautious, they excite the bold, and they test the patience of anyone brave enough to hold them. Tesla, Amazon, Nvidia, once labeled crazy, reckless, or doomed, became legends because a few investors had the vision to see beyond the fear. And now Palantir, Roku, Beyond Meat, Virgin Galactic, and GameStop stand in that same uncertain space. Maybe they'll collapse. Maybe they'll transform. But that's the nature of risk. It's the birthplace of reward. If you take one thing from this video, let it be this. Great opportunities never look safe in the beginning. They look messy. They look dangerous. They look impossible. But sometimes, those impossible bets are the ones that change everything. So, if you're ready to think differently, if you're ready to stop following the crowd and start looking where others are afraid to look, hit that subscribe button. Because the next story we uncover could be the next turning point in your financial journey. Don't just watch history happen. Be part of it.